following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, do we go into the breach, dear friends. And what do we got going on today? Well, as usual, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And we've got the S&P cash at 23.98, so we're down half a point. Volumes come in at about 2 billion shares, so a little bit lighter than even Friday. Friday, we came in, 600 million shares lighter than Thursday, so a huge pullback. That was just in the NYSE overall. It was a magnificent lighter move into higher prices. We have the same thing today. Volume's not as bad as it could be, but doesn't look like there's a big push. The market pretty much balanced on one stock, and that is Apple. Without Apple, we'd be probably down about 23.80, I suspect, along with the rest of them. I continue to see the semiconductor space around the Apple product supply group be fairly weak. And I think if it wasn't for our old friend, Mr. Buffett, telling everybody about blue skies forever, we'd probably be down a little bit more today, but that'll probably wear off tomorrow. Very interesting to see him out there trashing bonds. And, of course, they're off about 0.5% today. I didn't think there was anything new in this. It certainly looks like there's a bigger range in the TLT from about 116 to 123. We may have even had a false breakout. That 122 may be resistance from now on. VIX way down. A lot of people were expecting a bigger move, but under 10, which is normally a sign that there are no bears left. Doesn't matter. There's literally nothing that can move this market down. That is what the VIX is telling us today. Just doesn't matter. Anyway, going down anything yet? Nice for a Monday. Anyway, I think we probably would have been down a little bit more. I think we could have dropped 10, 15 points on it. My thought is that if the EU continues to exist, a lot of people are going to look at that as a distressed market and probably look at our market fairly toppy and think, well, maybe this is a faster horse to get. We'll move out of the U.S. markets. And, of course, if you're in France, that's exactly, and you were unsure who was going to win, that's exactly kind of what's going to happen. Very tough to see that there isn't some repatriation in Europe over the next few weeks. And maybe that's enough to move the markets down. But we have every kind of precursor for a market that could move wildly to the downside. Doesn't mean we will. But just like summertime and August comes, I'm looking for hurricanes starting to develop. We should be also, just because of the super light volume, the idea that money could come out of this market, get repatriated, problems with China, and maybe eventually one of those things blowing up in their face. A lot of stuff going on out there, but I'm fairly bearish out here. I thought that the market could go up about 10 more points. It has. Really hasn't, other than one position, really affected my positions that much. So we'll continue to keep an eye on what happens out here, but I just don't see a lot of push or drive to get above 2,400. Not a lot of people wanting to plant their flag above that level. And truly, a market that probably looks into earnings rather lower. We'll look at some of the stocks for after the bell tonight. But I think this is about, you can say, probably as good as it gets. Anything above here is just beanie baby buying, which is we don't care. It's going higher. It's going higher. Let's buy it because it's going higher. And that's when the gamblers show up. And we can see if we're in a full tilt 2000.com bubble in this market. But right now, the movement does not suggest that. Fairly light movement, fairly light volume. And I don't see anything out here other than the Signal Friday, which was up on extensively lighter volume. I mean, massively lighter volume, which looked to me kind of like a short squeeze. Kind of seeing the same thing today. We're moving up. Is the volume all that exciting? No. But again, it's the last 15, 20 minutes of the day. As always, we like to start off the show with a little bit of history.
Then it's all just a little bit of history repeating.
On this day in 1886, the first soda fountain of Jacobs Pharmacy in Atlanta sells the first glass of Coca-Cola. This new tonic beverage, its original popularity may come partly from the fact that it contains trace amounts of real cocaine and extract from the African cola nut, a stimulant and a thirst quencher. Of course, it did have cocaine in it. Cocaine was not even illegal until 1914, although that was 11 years after Coca-Cola decided to take out most of the cocaine. It was still in it for a while. They didn't perfect the ability to pull the cocaine out until 1929, when it really had negligible, and still does, infinitesimal small traces of cocaine. The extraction of the cocaine from the leaves before it's used in Coca-Cola is done in a company called Stepan. Never heard of it before. Apparently, they're in New Jersey. Actually, that should be 2013. Stepan imported 150,000 kilos of cocoa leaves for Coca-Cola. That's enough to make more than $200 million worth of cocaine. They didn't say if that was on the street or at customers' doors. That's always the important thing in any news report is street value, $200 million. They didn't say that. Just said it's worth $200 million. Don't know if it's worth $200 million to a guy in South America or worth $200 million to a dealer or a nose in New York. But, yeah. And, of course, the Stepan Company refers to the cocoa leaf extract simply as merchandise number 5. No real word on what they do with all that cocaine that comes out of the cocoa leaf. Always wonder. Maybe the fish are very, very feeling very good down the river. Maybe they take it out to the middle of the ocean. Maybe there's lots of cocaine for people that work there. Who knows? It is a mad, mad, mad market, and we're just going to get right into charts early today as it's fairly quiet. We'll be back, as we said, after this break. We'll start looking at the movers today. Then we'll look at earnings after the bell. But, 1 point move in the S&P cash, not telling a lot. Keeping their cards close to the vest today. Just over 2 billion shares on the NYSE.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we had a question in the den from Dan. Dan asks about my comments on WIN, and I just kind of look at this as a proxy for what's happening in Macau and China. As things get a little bit better, they allow a little bit more gambling. As things don't look so good, they cut gambling kind of off. I think part of this has always been they're worried that a lot of cash is leaving China. The thought always being that you don't want to have your cash over there with a bunch of communists that could come and take it any minute. So they put it into gold and bury it. They put it into cash and move it to offshore accounts around the world, give it to their brother here in the United States, whatever they can do to make sure that the long arm of the commies can't come and get it. WIN did come back up to this gap back on the 29th of April 2015. That gap was about 16 million shares. We kind of did through that, got about 6 million shares on the day that it broke above. And you really just have not done much. You've come back in and pulled back to this gap, a little lighter volume today. Friday, you actually had a little bit more, 3 million. Long term, I kind of use this as a proxy for what's going on in China. You're back up to fairly stiff resistance. Probably the biggest thing to me is the energy from the January 14th low of 2016 to the September 15th high. You get the B2C down to November 11th, and then what I'm thinking is the C and D point, this D point being April 26th from the C point of November 11th. Down about 25% on the energy up in that leg. So we've had a couple of days, actually a couple of down days that had some fairly big volume in WIN, but right back up to the level of highest resistance. And I don't see a lot changing out there. I said we were going to talk. Oh, cool. Somebody, we get all kinds of very smart people. I didn't ever look at it. Apparently all the cocaine that goes out of the Stepan company actually goes to Mallinckrodt, however you pronounce it, the pharmaceutical company, from according to Wikipedia. I didn't check that. Well, I guess maybe the people at whatever Stepan, yeah, maybe there's a cocoa leaf that goes missing from time to time. You never know. Anyway, Wynn Resorts, a proxy for China. At least I've been looking at it that way. You came down on a monster amount of energy back down to the low of October 1st. You did so with about the same volume as you did with the last low, which was back on January 14th of 2016. So we've had kind of a long time to go back up in this bigger trading range that is China. It just seems to me like when I look at the companies that should be doing well, if everything's true in China, and then I look at the price of copper, and I look at all the shipping companies that should be making huge coin lately, and we're going to talk about a couple of stocks tonight after the bell and why these stocks maybe have come off the bottom. Why aren't they doing a great deal more? So anyway, just very light energy back up into this 120 area. It got to 127.20, but the juice from that last leg has been kind of like the entire market, and that's off by about 20%. Kate Spade is getting bought out by Coach. This one popped today with a lot of volume. Didn't seem like much of a premium out here, so I'm wondering if there isn't more to come on this. A huge volume out here after coming down on a couple of huge gap downs for that. So maybe they just showed up at the right time. Maybe there's something bigger with Kate Spade, not big on women's leather goods, but you look at that. Of course, Coach was up too. Not many times you get the acquirer getting a nice gap up. This did gap up and through a gap that's been around for a while in Coach. Did I get any more? Do I have to go back further? There we go. When this thing was actually getting taken apart, we go back to the first big gap, which is on the 22nd of January 2014. That came down on 23.5 million shares. You don't get that much farther down the road to April 29th of 2014, when this gap's down with 21 plus million shares. So now we're over on the other side of this. And what do we have? A nice gap up with about 10 million shares. Kind of tough to see where this goes. And I'm wondering if this isn't like all other stuff. Amazon will get in the leather good business tomorrow, and that will be it. But you never know. Again, the biggest thing to me is these very weak legs on these last moves. You had very good juice from the September 29th to July 27th of 2016 moves. You had a nice ABC pullback. Energy did come back, so that was a pretty good buying opportunity, and it looked good. You could have bought it on a fairly decent pullback. I would have thought this gap down maybe a couple bucks lower than it went, but never got there. But now it's gone up, and it's gone up on about, 65% of the energy that came off the September 29th low. So really light energy back up into these gaps, and this is normally where you find fairly decent resistance. I'm not kind of surprised that you've given more than the gap up back from the high at $49.59. HZNP, which is Horizon Pharma, it gets the loser horn today, at least one of them that gets the loser horn today. Down, huge volume, blew through all the previous lows. Of course, it's a pharma stock, so you should be used to expecting the unexpected. JD.com, the Chinese company, that's kind of hard to say. It's an internet company. It's hard to figure out exactly what these guys do. But it is gapped higher with lots of volume. And, of course, Buffett and his minion Munger were out talking up a lot of China stocks this weekend. Not exactly sure why they would do that. Kite Pharmaceuticals, another one getting the loser horn today. I forgot to play it. didn't I? Where's my loser horn? Why is it not here? Why is it somewhere else? Now, we've got to play it, so that's all there is to it. Kite Pharmaceuticals, another one down. Looks like it's going to come back to this gap up that goes back to the 28th of February. That was 9.7 million shares that day. Looks like we could get fairly close to that volume today. So about $60 is the first point where this might find support. MNK, which is Mallinckrodt, a mover on earnings this morning after we found out that they take Coca-Cola's cocaine. Wonder if there's any combination here of the movement. Anyway, gapped up, gave it all back today, and a little bit more from Friday's close. Volume starting to pick up a bit. 41.57 the last low, and that would probably be kind of interesting area to buy. This 41.42 has tested the previous low on much lighter volume, but need this kind of get back down to the 42 area one more time. That would be the buy.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we continue to tread water at 23.98 on the S&P cash. Volume continues to be rather unbrisk, tepid, listless. I'm going to have to get a thesaurus. 2.14 billion shares on the NYSE, so fairly light. Other stocks of interest on earnings. Newell Rubbermaid, NWL, think that symbol changed a year ago. I think it was NEWL or something. Anyway, nice gap up. I guess people are buying Rubbermaid stuff again. I guess the Tupperware is in full swing. A lot of people were short this. I wasn't exactly sure why. Kind of tough to figure out when people are buying stuff or not. It's not like something you spend a lot of time with. Anyway, huge move higher with a lot of shorts on the wrong side of this, up to $52.87 with some decent volume, not as much as you might think for that move, but I think they're going to fry a lot of people. ON, semiconductor, nice pop this morning, gave it all back. Not much volume. Again, as I said, the semiconductor space looking kind of weak. Med Express, huge volume, huge movement, huge sign of strength. That monster gap got to scare the bejesus out of you. And I don't know what else you can say. That's what you're looking for. So back to $24 in light volume. Hopefully the pullback is over by then. Stamps.com getting a second loser horn out here of the day. Back to this gap up on earnings, which is on November 4th of 2016, 1.7 million shares. Got 1.8 million shares already. There was always going to be that last person using a stamp. And apparently we've heard about it today. I didn't look into the news, but down with fairly significant volume. Certainly looks like we're going to go above that gap of volume today. So look for this thing back under $100 at a theater near you. Straight Path Communications, of course, everybody keeps talking about this one. All I got to say is if this thing does not get bought out, it could go back to 40 in a hurry. Everybody talking about how this is going to get bought out by Verizon. I just don't understand the price. If they couldn't buy it at 40 and offer 80, are they going to pay $220? Is this one of these companies that just had so much short interest that they were going to take these people to the cloud? This one reminds me of Drives not that long ago that went from, $4 to $100 and back down to $1. You've got a three-gap play out here, and I don't know whether there's a lot of people doing a lot of stupid stuff at market highs. It was in 2000 and 2007. Everybody was trying to buy the worst company in the world and pay the most for it. So could it be that someone's really going to buy this at 220? Yeah, I think that if they thought they were, something different has happened. But man, three juicy gaps. All I can think about is if anybody would have the guts to sell me a put on this, just based on the chart, I probably would take it. Tower Semiconductor, another semi company out here, doing a little bit better than many of the rest, like ON. Good sign of strength and some decent volume. You really probably want a little bit more, but what do we got? Hour and a half left today, so you can keep an eye on that one. Tyson Foods, apparently having chickens without all the good shots is not as good as a lot of people would like. Down, volume's not all that exciting. You got a high volume low that it had not been tested back here on November 21st. Got to think that it's going to go back to that low of $55.51. And we talked about when already. Me thinking that the move down out here was kind of telling back into this gap. Just not enough juice out here today on it. So what are we going to do now? We're going to take a look to 23.97. So why don't we take a look at after the bell tonight? I don't think did I put I think I put my list together. I did. We were talking about how some of these shipping companies should be getting off the bottom of the barrel if things are really going that well, and China's again buying a lot of commodities. I didn't like the way that some of these things were trading, especially earlier in the day. Copper was off, I think 5 cents. Looks like it's off 3.75, $3 3.75 cents at $2.49. Again, this thing does not look like it's getting a bid, and you always have to worry about it, and of course the pullback on things like steel after they went to heaven and now have come back. Little bounce with no volume today on Eagle bulk shipping earnings after the bell. What is the other one out here that was after the bell? Yeah, maybe I didn't put it in my list. Maybe it's tomorrow morning. There's a couple more of these shippers that will give us a little bit of a read out here. And of course, if you look at the Baltic Dry Index, it's come off those highs fairly strongly. Anyway, EOG, a big natural gas play, had a nice gap coming back here from, what is that, August 5th of 2016, gapped up on 9 million shares. That is going to act as our support level. It has twice already. But I think the only play you have is if this thing comes back to about 85 bucks on light volume. Maybe midsummer you get 85 in this thing, and then get a setup, maybe something in natural gas to make you think that it's going on. I think the other one that's earnings tonight is G&K, which is, Genco Shipping. There may be a couple more tomorrow. I just can't remember it. This thing, of course, ran up with all the other stocks, everybody thinking that everything was going to go to heaven. These things have come off, not huge volume, but, just not a lot of juice. These things continue to burn a lot of cash, and I was in one for more than a few days. I would worry about it. HTZ, which is Hertz Global, this thing got whacked on the last earnings on November 8th. It's right back down to that level. 107 million shares, though, compared to let's call it 3 million shares today. It's well under that $17 low and just continues to discombobulate. I don't know. To me, if you were short and you made some juice on this after it went back up to 29 bucks, I would be covering my short all over the place. We've seen too many of these stocks where everybody's betting on the end of the world. All you got to do is come out with some numbers that are not horrific, and you get squeezed pretty hard. You can give me a call at 877-927-6648. Question about DDD from Rose. Well, we're back up here, and we are up there with volume. Energy was kind of lax. We'll talk about 3D systems, and we'll look at SSYS2 when we come back. This is like the third request today for me to look at a stock that surrounds 3D printing. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. As I said, we were just going to see some of these earnings coming out after the bell tonight. JCOM, did we get to that? Oh, we were talking about 3D systems. Had an email. I lose my place so easily. Anyway, Rose asks, what if we do if it pulls to 17? Well, you got a sign of strength out here going against previous highs. The downside is that you need it to break this $19.76 high from April 14th, 2016, and you had 14.5 million shares that day. So that is, I mean, you're into that candle right now with 5.8 million shares. Had some other stocks that were doing this and looking like this, like FireEye today, looked like they were going to break out, looked like maybe they had signs of strength, and had some fairly decent pullbacks today. FireEye's on a little lighter volume, but I would still think that what you want to do is wait for pullbacks on these. In the case of 3D systems, get that back out here. You want to see what's going on. To me, this thing looks like in a trading range from about $12 back up to this $18. You are a little bit better off than the October 5th high, but you still have that huge hurdle at $19.65. To me, maybe if it pulled back to light volume at about $14, it would be interesting. But remember my tale of woe that I've been giving for about a week, and that is if you get into a stock that's had a few a few lower highs and higher lows for a while, like this thing, the first break is normally a head fake. The volume is a little light, and I would be very, very nervous to be going out on a limb out here. To me, in the next couple of days, if this thing has no volume, then this is actually a potential short. Let's take a look at SYS and see if we get any confirmation out here. Now, this one gapped down on huge volume on April 15th, 2016. Came down on 4 million shares. We're back into that with 500,000 shares today. So 1/8 the volume. Energy off the low isn't all that exciting so much. Could it get up to $29? Yeah, it could. To me, the $21 level where this last gap up was and last sign of strength is kind of where I'd be looking at. Meet me. This looks like a big ABC down, doesn't it? Or certainly the possibility of it if this thing whiffs. You had a huge volume spike. You're back up above that. Energy has not been all that exciting off the move. Open text, one of these that just continues to go higher and higher. Any close below would make me think this was going back above the or below the 3x3 here. Would make me think that support is coming back in at about $31. I don't know enough about this company to know what their earnings are going to look like. Pandora Media. Everybody keeps telling me how this business is a great business, and it just seems like a way to throw cash and just burn it up. Just throw it in a big pile and burn it. But music has not been a good business in it since Apple, except for Apple, who sold a lot of iPods and iPhones on it. The rest of everybody else has been stiffed. I don't see any of that changing. This is right up in the line of going to China to find huge amounts of business. Apple. And never finding it. And all the rest. Yum Brand. Everybody. How many people have gone to China? Well, I think that a league into itself is the same people that think they're going to find a wad of cash in the music business. It just doesn't exist anymore for the most part. And you're kind of down a little bit out here. Some other companies actually raising cash to get yet into this business again. If you can't get Spotify out the door as an IPO, I don't know why Pandora is kind of a redheaded stepchild in that business. Just never understood why anybody wanted to be in it now. Retina Therapeutics, PETX, making a lot of drugs for our little woof woofs and meow meows. I got to get the meow 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 meow. You get that in your head, you just can't get it out. This one looks like it could set up to a 3-gap play to the downside. You've had 2 nice gaps. Now this thing's back up into its previous gap without much volume. Huge down day on the 14th of March. And you're back up to it. 3.3 million shares on the upside. Got into it Friday on 666,000. Mark of the beast. Down on a little lighter of volume today. POST, Post Holdings. This one is double topped with slightly lighter volume, 1.2 million shares to 900,000 shares on April 17th. It's started to come back down. You had a real big, juicy move up from the January 20th to July 25th high of last year. Now it's been kind of doing a big topping pattern on lighter volume. It started to pull back. Could it get back up to 90 on a good report? Maybe. I doubt it. Looks to me, even if it does, what you want to look for is the next trip lower if you want to buy this thing at 68.76. I would just think that this thing is in a bigger trading range for that while. RGR, which is Ruger company, this one could fall out of bed. The absolute best gun salesman of all time left office January 20th. This thing has tanked right after the election. You can see that huge gap down. It's come back and filled this area. I just don't see anything that ever drives the kind of business that we had in the last 8 years based on this, but kind of down with lighter volume. This gap at 52 looks like a long consolidation, but probably where support would be. Again, just very tough to see how this thing doesn't basically unwind the last 8 years of higher prices. Let's go back here. How far can we go back? We can go back a long ways. Back to the day after the election, I said one of the better shorts in the world probably had to be on a long-term glacial scale. Has to be probably these gun companies. Without the threat of getting your guns taken away, this is problematic. In fact, I'll have to look and see if there aren't any year-long options on this. Because this one, if the market started pulling back, I could easily see this thing coming back down and breaking through the June 8th, 2012 low of 27.79. There's still a little of this stuff left, but my guess is that the next 3-4 years, you could easily see this company always on sale. So take a look at that. What else do we have? Oh, we got break. That's what we got. We'll be back for the last segment. Of course, Tom O'Brien for the next 2 hours. We probably call up the evenings after the bell. Got a few more emails to get to. Tractor Supply. We'll look at that from Ken. Sent from his iPhone. Probably in Lutz, Florida. I bet.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're talking about Tractor Supply. This is back down to the previous low going into this. Man. Retail stinks, and it's not getting any better. I think these guys actually have been hit by Amazon in the last year and a half as residential delivery has gotten better. And most of that has been UPS and FedEx taking over a lot of what the post office used to do. And even the post office getting better, so that you don't have to drive up to the Tractor Supply. If you're unfamiliar with this company, they tend to be on the outsides of, I'm going to call them mid-sized towns, 100,000, something like that, that are heavily agricultural-like. They sell a lot of hardware that you'd need out on your farm, other things too, but they tend to be kind of a big Ace Hardware for farmers. And more of this stuff finding its way online, and you can just click even farmers getting at least a little signal out there to the farm. And you're down with heavier volume. I certainly couldn't buy it with this heavy volume against the previous low. Man, this just looks like it's going to break. I don't know what else you can say. Let's look at this thing a little longer term. You're up against this huge gap up that happened on 6.5 million shares. You're down on 6.5 million shares. These retail stocks just look horrible. If this thing breaks, you're going back down to $54.73. So what can you say? That's it. That's if you're lucky. If the thing just doesn't gap away, then you got $39.68. I just don't understand it. Heavier volume on the way down than on the way up, or at least heavier energy. Heavier volume than the last low. Is there something else going on out here? I don't know the company well enough to speak on, but man, it just looks like retail, even in the countryside, may be starting to be affected by the juggernaut that is Amazon that will acquire. And what is it? What's the Star Trek thing? You will be assimilated. But it had a nice move up there a couple of times into 86. One of the few companies I've ever noticed that didn't hit 100 after getting into the 90s, which is kind of weird. This one's the exception to the rule. You can pretty much bank on it 80% of the time that you got up there with a double top on lighter volume and gave it up. I still wouldn't have been able to pull the trigger because of the 90s. But, man, clear signal at the top. This thing could get down in 39s and 36s with any kind of bad or continuingly bad news. So I don't know what he wanted to do with it, if he's long or if he's short the thing. If you're short, I'd probably hang on. This thing does not look good, and the rest of retail looking that way too. So we've gone through the earnings tonight. Doesn't look like there's much of anything out here that would move the markets. Good heads up, though, on a couple of those stocks that are in the shipping area. Again, they're tiny stocks, not going to move it. But until I start seeing maybe some lower availability of ships or something where these things get off the lows, it continues to make me think that the world overall is not seeing the big move that we thought we saw earlier in the year, i.e. everybody buying steel, everybody buying aluminum, everybody buying everything. This looks to me like that's all kind of quieted down. I am somewhat bearish, but I will be here tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. Hang on for the Tom O'Brien Show.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.